Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Hey everybody, welcome to the weekend edition of the Daily Market Commentary. I am your host with the most, the best of the rest. I rhyme all the time. No, I'm just kidding. Those were terrible. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing weekend. We're coming at you on Sunday nights like we do each and every week. A special welcome to the members of TradersArmy.com who are joining us for the core market perspective as we are going to fire off a weekend edition of what we do each and every day here at the Daily Market Commentary Party House. So let's go ahead and get rolling. So we're going to start off with the S&P 500 as we had a big Friday sell-off. Now, I didn't get a commentary out on Friday morning. I wish that I had gotten one. I was unable to get that done. But if we think about this line that we had for a breakdown, our breakdown did occur, and I put a tweet out about there that our breakdown had occurred and reached target 1, and target 1 would have been this area right here, which is our opposing fair price value area. It then came back up above the breakout line before then completely collapsing on Friday. This was a huge move down Friday afternoon. Now, we've opened up, frankly, to my surprise, a bit higher on Sunday. I really anticipated us opening up a bit lower, especially with some of the terrible news that we heard about what happened in Syria. I figured there was a strong chance we would open up a bit lower, but I do see definitely a pretty strong hourly downtrend. Now, we had a lot of movements last week, a lot of movements, and it was really hard to find good reasons to get into a whole lot of opportunities. So this is, you can't get a more clear picture of a basing market. This is a base. That's what we're in. That's what we have. We've got a basing market and a basing position. And right now, that base that we have is not really going a whole lot of places. So what I would look at right now for an opportunity, we may get a little bit of an opportunity right through here. So I'm gonna draw this one out, but I'm gonna put this as a dashed line because I'd want to see price come in and then start to go out. Only because anytime you're dealing with a sideways market environment, it's always going to be a harder trading. This is tougher sledding. This sideways market environment is no doubt tougher sledding. It's the hardest type of trading you're going to do. One of the things I do want to pay specific note to is that if I look at a daily chart, the price pattern that we have, that we are forming right here on our daily chart. Oop, didn't mean to draw that. The price pattern that we're forming right here, this whole area, this pattern itself is actually very reminiscent of this pattern. If I took this current pattern that we have over here on the left and I ended it right here, that would be exactly where we are right now. If you see, and if I can take a second and kind of draw this out for kind of comparative purposes, it would look something like this. Let me take a real quick screen sketch. And pardon me, I'm drawing with my finger, but hopefully you'll be able to understand what I'm talking about here. When I look at this, I see that I have this pattern of price came down. We did a little bit of a double top, came down again. So we have this move down, a little bit of this double top in here, came down again to retest the lows. That's the pattern that we have set up right in here before then we take this move higher, right? And then we got to move higher before then actually getting lower and then having some pretty explosive growth from that point forward, right? That's kind of where we were in there. Now, so what I'm paying most attention to though right now is really just this pattern where we were in, this double top right in here, and then actually didn't go down quite that low as I look at it again. This pattern right here. Well, if I were to do the exact same thing and just kind of put an overlay here over what we have right through here, you would see that it's a very similar pattern, a very similar look. Move down, up, and that's where we are. Now, I'm not saying, by the way, that we are going to come smoking up out of here with a brand new all-time high, although I think that it's a strong possibility. What I am saying is I feel like we could be getting a bit of a shakeout through here, and that a lot of people are overreacting on their long-term investment portfolio. It's not time yet to overreact. And I say yet because it might be time to react soon. But right now, it's not the time to overreact. Right now, it may be time to start looking at other types of investment ideas, looking more into a yield position. But right now, we're still above kind of that longer-term protective view. So for you longer-term traders, longer-term investors, it's a different picture. For traders, well, we did get a higher swing high on a 4-hour chart. On the hourly, we're still putting in lower highs and lower lows after we put in that higher swing high in the 4 hours. And that's why, since we've got that, the 4 hours is pointing to an uptrend, the 1 hour is pointing to a downtrend. That's why right now we've got a dashed line because we're waiting for confirmation entry. Okay, so a little bit deeper today, but I thought it'd be good to kind of go over that. The NASDAQ, I don't have, I could use that same confirmation entry here in the NASDAQ for a potential short. We've got a really nice one up above us here that's in this range, but once again, we've got that sideways price action, so not a whole lot to cover on the NASDAQ versus what we had before. Crude oil. I was talking to a dear friend of mine tonight about trading crude oil, and he said, crude oil, I sometimes don't know what to do with crude, and I say welcome to the party. There's a lot of wide opportunity in here in crude. The problem is that I need a reason to get in. I need a definitive reason. Someone, it's kind of like that line, Missouri's called the show me state here in the U.S. I'm from Missouri. You got to show me. I'm not really from Missouri, but you've got to show me. You've got to give me a reason to want to trade. And right now, I just don't have a compelling reason to get in. I need a compelling reason to buy. I need a compelling reason to sell. I don't have that at this point. Little bit of a possible compelling reason right here for potential short. So if I go to a 15-minute chart, we'll be able to pull it up and see. So, we're getting a little bit of a rollover off of this area right now, but I don't like the weak arrival that we had into it. So I just don't have a compelling reason on either account. And what I don't want to do is force the shot. I think back to a basketball player, and as a basketball player, oftentimes when you get in the game, you want to force it. You want to throw that thing up there. Well, this is not a time to do that, and I don't feel like I want to be forcing an oil trade. Gold, let's take a look at gold. Now, gold hit our entry on Friday, so we did have our Friday entry. It came down out of our entry on Friday, and it's come back up and almost got us in. So we're still hanging tough on gold, although that could, kind of continue its move to the downside. So keep an eye on those gold, that gold position as it currently stands. Not a whole lot happening in that one. Looking at the bonds. Now, our bond position, I was really worried about this bond position not working out, but it has continued its march higher, and our bond position is continuing its run. So this one has continued its run higher. I'm going to remove this line for now because I don't want to use this level again. I don't even want to make it sometimes I'll take a line from a solid to a dashed, but I don't even want to use this level again because we traded all the way to the bottom, and then we tested it a second time, and it's still held, and it's still going up from this point. So if you've got a profit, great. Maybe take your stop and maybe take some off the table or move it up to break even. So nice job on that one, but it's continuing its run. Nothing really to add, by the way, as well on this. Nothing I want to really kind of throw in there. We bounced off this area here, coming down from it, but maybe in here there's going to be an opportunity, but I don't love the time of the day that this was formed, and so I'm going to hold off for the meantime. Looking at the Aussie, so the Aussie, we had a potential short set up in here. We did not get filled on there. We came pretty close, unable to get filled. And now we're just kind of chopping around in the Aussie. I'm actually going to remove this level. I'm going to remove this area. I had this as kind of an area that was a level on top of another fair price value level. And I'm going to remove that bottom one. I just want to go to the top one at this point. And we're just, once again, chopping sideways, tough sledding in a sideways market. The euro price came into our euro level, and look what it did. Came right through. So when price comes right through our level, there's no reason you should be getting in those trades. And that one blew right through on a dashed line. So that's why we have those set up in that way. It's slightly lower probability. So I'm going to leave this one be for now. Nothing really that I want to add. When I look at this on a 4-hour period, you'll see on a 4-hour period that we have, come up off of this low back here, but we're still above our next 4-hour level right through here. But once again, sideways market, tough sledding. Looking at the Canadian dollar. So the Canadian, we hit our entry. We moved down. We hit what would be considered target 1, which I put in the Twitter feed on Friday. We came in again and came out of it, and then we eventually came through and just broke the level, although, may not have been stopped out depending on how much wiggle room you give yourself. I am, however, going to completely remove this area from our potential list. Certainly, it's been used up on multiple occasions. When I look at this on a 4-hour time period, we do have an area up here to look into and to pay attention to. So I'm going to kind of wrap a little box around it, and now we'll go down to the 1-hour chart so that we can go look at it a little bit cleaner. There we go. So on the 1-hour chart, this stands out a bit bigger. And let's get rid of... Oops, my fingers are a little fat this evening. So let's get rid of this green box. We have no need for the rectangle. We'll just look at the area. So let's zoom in on this, zoom in again, zoom in again. Now when I look at this, and I'm zoomed in on this pretty heavily, when I look at this, and I want to really tighten it up, right? I want to tighten this area up to give me the best probability. Keep editing properties, and I just need to activate the drawing. There we go. I'm going to tighten it up to just this bottom right here, as well as that top. So if I just have that bottom, right to here, as well as this peak up here. So now, why do I have that? Well, because there's really a little bit of an area in here, and there's a little bit of an area right here. And so I'm really encompassing both of them by wrapping my lines around the two, okay? So that one's a little bit further away from where we are now, but I think that we could make it up to that region fairly soon. So we'll keep this area in mind going forward in the Canadian. Last, but certainly not least, we've got our Great British Pound and the Japanese Yen. So the Great British Pound, we've got a potential long breakout, and boy, we keep busting our head against there, don't we? So if we do keep busting our head against there, you get a breakout above that level. Remember, your stop's going to have to go below this low here, because on a breakout, your stop goes below the opposite pivot of the direction of the breakout. So if we break out to the upside, my stop's got to go below the last pivot low, which is going to be down here. So give yourself plenty of room. You may want to take your first target at a little 1-to-1 reward to risk on this one, because you've got a fair amount of fair price value area just above. Let me open that up. I'm sure it's a little hard to see on the smaller eyes. So if we do get the breakout, your stop's going to have to go below this area here, which isn't even really truly a pivot, but this is a pretty nice high base. Breakout above that high base, then you might want to take your first target somewhere right up in here. So it's a fairly short-term move in order to get a little run out of this one. Japanese yen, we've got a level coming up that we're coming close to, so we'll leave that one in play. And then Nat Gas. So let's look at Nat Gas real quick. Nat Gas, we are going to slide our way over here to the 4-hour. And looking at the 4-hour, we're going sideways. What did I say earlier today? Tough sledding. You're always going to have tough sledding in those sideways price patterns. Now, you do definitely have lower swing lows and lower swing highs. No question about that. And today, we gapped down. It immediately filled the gap and continued to trade down. There is a little potential trade right down here. Little one, okay? This is a fairly low probability, but sometimes those little bases above pivot lows can be good little reversal points. So I'm going to change this to a dashed line, meaning that I'm going to want to see price come in and then come back out. But this could be a good opportunity. Know your risks, set your stops, and don't forget about your positions. But I think this could be a pretty good little opportunity going forward. So if you have any questions at all, feel free to send me an email, chuck@iiefinancial.com. I'll do my best to make sure I get as many of your questions answered as possible. But until tomorrow, stay safe, keep your stops in place, and I will see you on the flip side. Later.